In today's video, we are comparing Mansa X and Arvocap. Allow me to start with a disclaimer. I'm a financial educator and I walk you through different financial products, and my job here is to introduce and break down financial products in an easy to understand way. I share my personal financial journey combined with lots of research to just bridge the gap in the financial education for Kenyans and also for Africans. So if this is something that interests you, make sure that you join our community by hitting the subscribe button, okay? That being said, let's review which investment is better for you, Mansa X or Arvocap. So if you are confused on which account to have, I have done the research for you, and I'll be bringing you the differences and also the level of risk between the two accounts to help you make an informed decision when you're investing. So this is a side-by-side comparison video, right? I'll start by mentioning that Arvocap has a number of products, and I know they can be a bit confusing sometimes, and it would be wrong also to compare all of them with Mansa X. So to help you with this, I will like to highlight some of the other Arvocap's products and indicate what they invest in so that you can see if there is something else that you're interested in more than what you're going to be covering here today. If there is, just make sure that you type in the comment section so that I'll review it on a later date, on a later video. In this table, I have also indicated the returns for each of the products or for each of the investments. So take a look and see whether there is something that will interest you, and also remember to do your own research before you invest in that particular fund. And I have to say this, Arvocap has a very nice flowchart in their website that categorizes this investment based on on your goals or the goals that you have when you're investing. Please take a look because I think it will be very helpful in guiding you on which investment to actually take. And just to mention, SIB, who is the fund manager for Mansa X, also has other products beside Mansa X. And here is a screenshot just for you to look at to see whether there is another product that will interest you as well. Now, I think we can all agree that the right fund to compare with Mansa X in Arvocap is Arvocap Multi-Asset Strategy Special Friend, because they both fall under the same category of special friend. But I also know that most of us are not torn between the multi-asset special friend, but between Mansa X and Arvocap Almasi Fixed Income Distribution Fund. For the purposes of this video, we are going to be comparing Mansa X and Arvocap Almasi Fixed Income Fund. Then maybe on a later date or on a later video, we are going to be comparing the multi-asset special fund, because now these two, they fall under the same category. But I think the Arvocap multi-asset or the special fund for Arvocap, I think it's best fit for those people who are maybe in diaspora, you get paid in dollars, or you're just interested in investing in the dollar account, because now the Arvocap Multi-Asset Strategy Fund is a dollar account. And I think when comparing it with Mansa X, it will be fit for us to compare it with the Mansa X USD account here. So if you're interested on that, make sure that you hit that subscribe button so that you don't miss out on it, okay? I think the best place to start the comparison between the two funds is on the returns, yeah? And on this, I think it's good to note that Mansa X has been in the market since 2019 and Arvocap started their operation in 2024. So based on this, we are going to be comparing the returns on this period of time, okay? So Arvocap Almasi Fixed Income Accumulation Fund had an average of 24.6% over the past 12 months. And so that we can compare the same period of time with Mansa X, let's find out the returns for Mansa X from 2024 June 2024 to June 2025. Because now this is the period of time that the Arvocap Almasi Fund has been in operation. When I did the calculations, Mansa X did a return of around 19.86% for the same period. So Mansa X gave a return of 19.86% and Arvocap gave a return of 24.6% in the same period of time. And here is a table to just highlight the differences so that you can check and see the difference in returns. So the other key differentiating factor before we look at the investment strategy is the minimum investment required for each of these funds. So for Mansa X, you need 250,000 Kenya shillings to start investing. And if you need to top up later on, or you need to top up after the first investment, you will need a minimum of 100,000 Kenya shillings. Then for Arvocap Almasi Fixed Income Fund, you will need a minimum of 100,000 Kenya shillings to start investing. And then for the top up, if you want to top up your account later after the first investment, you'll also need a minimum of 100,000 Kenya shillings. So the minimum top up is the same, but the initial investment for Mansa X is higher than the Arvocap Almasi Fixed Income Fund. Okay, now it's high time we look at how each of these funds invest your money when they collect money from you, or basically the strategy of investment, which also determines how risky that investment is. All right, I want you to pay close attention to this because I think this is what makes these two funds very different. And we are going to start with the one that offered better returns, that is Arvocap Almasi Fixed Income Fund. And this fund invests in Kenyan government bonds. And here you can see where they actually invest in the three areas, but you can see that the Kenya government bonds take the largest amount of your investments. Now, here is where this fund gets interesting. Instead of them buying bonds directly from the Central Bank of Kenya, like in the primary auction, just like any other fixed income fund, this fund, it goes shopping for these bonds in the secondary market, where bonds are sold by other investors or resold by other investors. And by other investors, I mean those investors who bought in the primary auction or in the primary market, and now maybe they invested in a bond for a long-term bond, maybe a 20 years bond, and in between they wanted to sell this bond for one reason or the other. So in that case, they can't sell directly in the primary market, or they cannot resell the bond back to the CBK. So they sell it in the secondary market. And this secondary market is now where the Arvocap Almasi Fixed Income Fund get their bonds. So in the secondary market, they have one goal: to buy low. They buy the bonds at a lower price and then they sell high. Okay, and that is a strategy. It's just like flipping bonds. Like, you think about it like flipping houses. You know how people buy houses at a lower price and later on they sell it at a higher price? It's the same thing. They buy at a low price and sell at a higher price. And this is how it works. So the fund manager, they buy the bond at a discount below its face value, okay, or below what it would have costed in the primary market. Yes. Then they hold it for a while, and when they're holding it, because you remember this bond had a coupon rate, they'll be earning that interest. Okay, then at a later date they are going to sell this bond at a higher price when the markets are hot. So they time the markets to determine when they are going to be making profit when they sell this bond that they bought at a lower price. Okay, so the fund manager do this on your behalf. So you contribute the money, you give them the money, and they use your investment to just hunt for good deals and time the markets to make good interest with your money, and then you get your interest back. And that is the core strategy for Arvocap Almasi Fixed Income Fund. Now, before we look at the risk of this fund, let us look at the core strategy for Mansa X. Now, just like Arvocap, they also do active trading, but in this case, they do so on different assets, not on bonds. Okay, these different assets can be global or local. Here is a screenshot on where they invest, and you can see they diversify in the global markets and also in the local markets. Yes, and in addition to this, they do what we call long and short strategy. Mansa X takes long positions in assets expected to rise and short position in markets that are expected to fall. Basically, you know, when the stock market is it's crashing or it's going down, Mansa X can make money in such a situation, because what they are going to do is just predict that the market is going to crash, and when they are right, they make money. Then if the market is going up, They benefit in two ways. Number one, they have already invested in individual stocks, and then they can also predict that the market is going to go up, and they make money that way. So this allows them to make profit in both the falling and in the rising markets. At the same time, they make money from the individual stocks that they have invested in, or the individual assets they have invested in when the assets do well. All right. And I know Mansa X has a complex portfolio allocation, and I would say they use sophisticated techniques to just balance the risk and also optimize the returns. Often they hold over 100 assets at once, actually 200 assets, with no single asset exceeding 1% of your investment. So if you have invested like 100,000 Kenya shillings, they will only have 1% of your investment in a single asset, no more than that. So this means that even you losing everything that you have invested in this fund is very rare, because now this brings a lot of diversification in the fund, because they have invested in more than 100 assets, meaning that if one asset does not do well, the other one will cover. Now, that is the core strategy of Mansa X. Now that we know how these two funds works, I would like us to look at the risk for each of these funds, after which I will share a table with other differences such as the lock-in period and things like that, okay? Let us look at the risks. But before we do that, I would like to start with this. Both of these funds, they do not guarantee capital preservation. I know their core strategies are very well structured to minimize the risk of you losing your money from these investments, but they are not 100% risk-free. And I would recommend that even when you're going in to invest in these funds, you make sure you're also diversifying in other funds as well. Make sure that you have an emergency fund somewhere in a fund that guarantees capital preservation and also is accessible to you. Just make sure that you're not putting all your eggs in the same basket, okay? Now, let us talk about the risk, not just about the theory, but also how it affects your actual capital. We start with Arvocap Almasi Fund. So this fund is basically designed to preserve your capital, or to protect your capital, because it invests mostly in the government securities, and also if it has any, they also invest in high-grade bonds, corporate bonds, which are considered low-risk investment. That means your chances of losing your initial capital are minimum, but they're not zero, okay? So bond prices can fluctuate, and we have seen this even in the current market. They fluctuate a lot, yeah? And that affects the returns. So the fund core strategy, as we discussed, is active bond trading. So this means when interest rates are falling, like what we're experiencing right now, older bonds with higher coupons payment become more valuable. True? So Almasi can sell them at a premium at this particular time, and this boosts their returns. But when the rates rises, new bonds offer better yields. So for example, right now the rates goes up, and then now it would mean that the new bonds will offer better yields. It makes the older ones less attractive. I hope you understand that. So when the rates for bonds start going up, because now such a fund will be holding bonds that are older, it would mean that they will have a lower coupon rate than the new bonds that are being offered, unless the fund holds long-term high-yield bonds from earlier period, or they had bought those bonds in a date that the yields were better than what we have right now. It may struggle to compete in such a market. So in such cases, the fund might choose to hold the bonds to maturity, and in this case, investors will still earn income from the coupons because they had invested in bonds and the bonds are still paying the interest rates, but the returns won't be as impressive as during the falling rates environment. So basically, while Almasi thrives when the rates are declining, its performance in rising rates cycle depends heavily on timing and also in bond selection. Okay? Now, let us look at Mansa X. And as we mentioned earlier, this is a multi-asset fund structure to perform both in the rising and also in the falling markets. And due to this, it gives it more flexibility and also potentially higher returns in the long run, but also introduces complexities. Its biggest risk comes from exposure in the global financial markets, which can swing sharply due to maybe interest rate changes, geopolitical events, or economic shocks. But the good news is Mansa X strategy allows it to profit in the volatile conditions as long as their timing and trade analysis are accurate. If the fund misjudges a move, then it can suffer a lot of losses. Now, looking at their risk profile, Mansa X is rated at 2 out of 5, while Arvocap Almasi Fund is rated at 3 out of 5 according to their official documentation. Yes, so Mansa X lower rating likely reflects its diversification strategy and built-in risk control, such as the asset diversification and also the long and short trading model. That being said, both funds carry risk. For Arvocap Almasi, you could lose part of your capital in rare cases. For example, if the fund sells bonds at a loss due to rising interest rates, or if liquidity issues forces them to sell assets below the market value. These are very rare scenarios. They are uncommon, but they are worth understanding. I think all the investors need to understand these, the occasions when they can lose their money. Now, here is the trade-off. Arvocap Almasi offers stability and safety, but returns may be modest and sensitive in interest rate changes when the interest rates are rising, as opposed to when the interest rates are falling. Then for Mansa X, it offers an adaptive performance with a strategy that can thrive in the volatile market, but it's not risk-free, and the returns can vary depending on execution. And if these two funds went out of business, I think you would suffer more loss in the Mansa X account, because now Mansa X invests in risky investments, and liquidating such an investment would mean that maybe you would make a lot of losses as opposed to Arvocap Almasi Income Fund, because now they invest in government securities, and what they would just do is sell these bonds in the secondary markets again, but they would sell them at a lower rate, meaning that sometimes the rates might be lower, or it might eat a little into your capital. So keep that in mind. I would do a separate video to just break down the specific risk in the multi-asset fund like Mansa X, including how they manage volatility and protect investors' capital. And I would also like to review Arvocap Almasi. Just comment Arvocap Almasi full review so that we may go deeper onto the structure and how this fund works and how you could actually lose money in this particular fund. So before I end this video with a table, as I promised, let us discuss about the investment fees for these two funds. So for Arvocap Almasi Fixed Income Fund, there is an initial fee where you pay % of the amount invested, okay? And then after that, there is an annual management fee of 1.0%. And then if the fund delivers above the hurdle rate, which is, I think, 25%, you get to pay 20% of anything above the 25% mark, right? Now, for Mansa X, there is no redemption fees. The financial charge is 5%, and they have a performance charge of 10% above the 25% handle rate. So if they give a return above 25%, anything above the 25%, you're going to be charged 10% of that. All right. Now, there is something interesting that came up during a one-on-one session that I was having with a client. When he asked about the fees, I explained to him that the fees are deducted from the returns. Yeah. And I told him that the returns that are reported mostly, especially in the fund fact sheets, they are net of management fee. And then he went ahead and asked me, why don't they just say that? Why do they say that the fees are charged on the asset under management? And I remember there was a time I was discussing this with the customer service of one of the fund managers. I was struggling to understand why they were deducting from the interest, but they say that they deduct from the asset under management. But when the clients ask me this question, I think it just hits me. And yes, the statement is true. When the fund performs well, fees come out of the gains. Yeah, they deduct that from the returns. But if the market returns are negative or below their management fee, the fund managers will still get paid, right? Because they still did their work, right? Or they are still managing your investment. So in such scenarios, then what is written takes effect. The money will be charged on the asset under management. That is the money invested. In cases where the fund reported maybe a negative return, or it reported a return below what they charge as management fee. So I think that is the whole idea. The fact that is the reason why they say that the fund is or the management fee is deducted on asset under management, just to cover the fact that in cases when the fund does not do as well, it will still charge you some fees because they're still managing your fund. And this is not to alarm you. This is a standard across most funds. Actually, all of the funds that are managed, this is the standard, that they say that the management fee is deducted from asset under management, but it's something you should know. And this is exactly the reason why I will always remind you, make sure that you diversify your investment just to mitigate such risk. That being said, here are other notable differences that do not require a lot of explanation, but if you have a question, let me know in the comment section. And if after this analysis or after going through several videos and understanding how these two funds work, you're interested in exploring either of these two funds, feel free to reach out to me. For Mansa X, you can give me a call and I will gladly connect you with someone who can help you get started with the account setup process and also investing. And for Arvocap Fund, I will include a very helpful link in the description box below. Just follow it if you would like to learn more about it, or you'd like more details, or want to invest directly. So, and as always, I'm here to support your investment journey and answer any question that you have. So don't hesitate to get in touch. Thank you so much for watching. Remember to subscribe if you're interested in learning more about Mansa X and also Arvocap Almasi Fixed Income Funds. I have done individual videos to just discuss these investments. Make sure that you click on one of them, the one that you're interested in. Happy investing. See you in the next video. Bye.